Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 22nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios. But please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We got some economic data here today. Across the pond, not a whole lot to be said over there. They have had a couple of auctions for 10-year bond auction, 30-year bond auction. And then here in the United States, we got existing home sales came in lower than expected at 5.48 million units versus the expected 5.59 million units. Also, we got crude oil inventories coming in at 5 million barrel build. Was expected to be a 1.9 billion barrel or million barrel build. So a lot better than expected there. Not necessarily good for crude oil. As a matter of fact, crude oil went down below this Fibonacci level we've been talking about for about a week now, this 38 fib level. It got much lower than where we were looking at yesterday at 47. It came down and touched that, kind of repelled away. Anything lower than that, it was sure to go down and test that 50 or $45.80 level that I've been talking so much about. I think that that's the real magnet. So looks like that might be off the books as of right now, but with this massive build, such a huge supply out there, I think that it is pretty inevitable at this point. So pretty bearish on crude oil at this point. And I think crude oil could end up bringing down the broader market of equities, not as a massive sell-off, but at least a midterm correction, if you will. Gold futures still up on the day, up about $1.20, trading around $12.50. The real thing that we were talking about was that yesterday that this was going to be the resistance level. We kind of gotten above that now. The next line in the sand to go to is right up here at around 1270, let's call it. Now that we're above that 200-day moving average, it is looking much more bullish. Also, we're starting to see this 9-day moving average get ready to cross that 200-day moving average. It's not really a hugely bullish prediction on that, but at the end of the day, when the 50-day moving average crosses over that 200-day moving average, that makes it seem much more bullish. So, but it is starting to turn the knobs a little bit there to the upside on gold futures. So just keep that in mind. And then on to the bonds. Bonds come up and touch the point of control for the most volume that has happened over the last basically 52 weeks. And you know, when we came down, touched that value area low, it seemed to repel away. There's just not a whole lot of participation down there. Might have gotten a little ahead of itself, but still looking to price in future Fed hikes. So at the end of the day, it's probably going to stay right here between the point of control and the value area low for at least the foreseeable future. I don't really see it coming up and even thinking about testing this 200-day moving average, despite the fact that we've gotten above the 50-day moving average today. Bulls are more in control of this, but at the end of the day, I would have to think that saner people will prevail in the fact that it does not look like they're going to be lowering rates anytime soon. Then on to the Dow Jones Industrial Average. It was down pretty big after that crude oil and the existing home sales number, but has since forgotten, if you will, and pushed up almost into positive territory. It's up on the day from where it's opened. That's why it's got that green bar, but still down 9 points on the day right now. The NASDAQ probably leading the way to the upside. Yesterday we talked about it, created that new high, and that gave the room for the bears to really kind of take control of this. It just got printed, and then that was a target and the overall market just fell out of bed for the most part. The rest of the day, there was almost no relenting for the most part. The Nasdaq's up 26 points on the day. One thing to keep in mind, this low is the low of the overnight. It's not the low of the day session. And I don't have the ability to click off on that, but I'll show you what it looks like on the E-mini S&P. This is the E-mini S&P. They're also up on the day just slightly, albeit this could start, these two dojis that we were looking at in the Nasdaq and the Dow and even in the Nasdaq are looking like they could be acting as support. Bulls really defending this area. They did not want it to get down into this little lull because that would be a real quick move to the downside. And I talked about it looking like it wants to go to this volume node if it gets below here. But right now, fighting tooth and nail to stay above that little lull. This is the 30-minute breakdown of the E-mini S&P for the last 20 days. The thing I wanted to show you on this is if we look at this low right here at 23.32 and a quarter, if we pull out the day session, if I go in here and take off the extended hours area and look at that, you can see that we missed that by a half a point. You know, to me, it seems like maybe we've kind of achieved that already. As a day session, they might feel like they've printed that, but the cynic in me still is a little weary about that not being printed within the day session. Now on to the trades that I've done with Citi. Yesterday, the broader financials have been really outperforming for the most part to the upside. Yesterday got me a little bit spooked, if you will. So I wanted to just get out of my Citi for a profit if there was an overall major correction going on. So I ended up just deciding to cover this trade here. And I had on a poor man's covered call in there for the long side. So it's just, I didn't want to let this winner turn into a loser. So I had on the September 45 calls that I was long, and then I had covered that with the April 65 calls, and basically covered it for a scratch right around $13.10. So for all intents and purposes, that was a scratch on the day, or scratch on that trade. I may have lost a couple of pennies on that or so, but at the end of the day, pretty much a scratch. So that's all I've got for you guys today. Just covered that. Wanted to also, the reason why I kind of opted for this one, I also wanted to cover some of my long deltas in order to add some more, in a sense, synthetically add negative deltas. So if I get rid of some of the longs, it makes me more negative delta exposed. So if we had a broader sell-off, I was going to try and add some deltas, but as soon as I got out of this one, the overall market started looking a little bit stronger, so I haven't added any short deltas at this point, but still kind of touch and go on what I'm going to do there. So stay tuned. You can follow me on Twitter at Wolfman's blog. Also, Friday's webinar is going to be on pairs trade. So we're going to start creating a couple strategies for the next couple of weeks on how to play two different stocks against each other. If we get some of these sell-offs, sometimes we're going to see maybe Citi give up more room to the downside than we will see in JP Morgan, let's say. So we're going to try and take advantage of some of that. If one of them's lagging the other, we'll try and take advantage of those kind of situations where there's a divergence in two stocks that are normally very correlated. So stay tuned for that. Hopefully we've timed this one right. So go to protraderstrategies.com. That's all I got for you guys today. If you can't take that, take it easy.